So welcome everybody to the last edition of ICP.Lab Business Boosters, our commercial enablement series that we started every Thursday in March. This is the last edition, so I see some familiar names in the chat, and for the new ones, welcome to ICP.Lab Business Boosters. Today is a really cool topic that's really close to me since I'm working daily with many teams that build on the internet computer and looking to get their projects funded. Today is all about entrepreneurship for Web3 builders. And we have a quick intro from me, and then we have Sal from Warburg Serres and Linda from Scalar Capital and Alar from GSR, all VCs and market makers that are active in our ecosystem, and they will tell you more on the best ways how you can get your project funded. And in the end, we have some Q&A before we close the session. So I'll start with a quick intro about DFINITY and what we can offer in terms of getting projects funded. So we have a fund for grants that is around, it's more than 200 million in there. We deployed currently around 50 million, so lots of money still to get out to developers and teams. And we usually start always with a grant roughly 5 or 25K, depending if you're an individual or a team. And we also really encourage people not to directly apply for a 100K grant, because we rather get to know the teams and start with you rather with a small project and see that you get familiar with building on the internet computer, and we get familiar with you as a team. And the whole idea with the grant program is that teams discover a problem, find a solution for the problem, develop a product, and essentially we want the teams during the grant to find a product market fit. And that means for us, in most cases, like getting users that use your product, have some traction on your app, on your game, or whatever you're developing. And once we see that, like, of course, we sometimes also give follow-up grants to teams that are going through our program. But once we see projects are ready and already having a product market fit and are growing in user base, then it comes to the next part, which is called VC or SNS. And the whole VC topic we're covering today with the 3 panel speakers. And the SNS part is something that's quite new. So this session is not about running your own DAO and raising money like that, but I just shared that slide since it's actually this month. It's crazy. Just 3 weeks ago, we from the DFINITY Foundation, we basically released the SNS, which in a sense is a template of our NNS, the on-chain DAO that governs the ICP blockchain. And OpenChat was the first app that did a decentralization sale, and they raised 1 million ICP. That was at this time it was roughly $5.5 million in less than 5 hours. So this is also a way to raise money. It's especially common for teams that have a high user base, or teams or projects that want to have their users being a stakeholder. And for that, it's especially useful for games or social media apps, metaverse projects, and so on. But for now, I hand over to Salvatore, who will tell you more on how to get started after you receive the grant from us.
Cool. Thank you, Tim. Nice to meet everybody. I haven't had a chance to meet with some of you. I do see some familiar names in the chat as well. So I'm a partner at Warburg Serres. As Tim mentioned, we're a Web3 venture capital fund, keenly interested in investing into the internet computer ecosystem. We've been longtime supporters of Dominic and the team, and have a pretty significant position at Layer 1 that we intend to expand on through investments at middleware and app layer in the ecosystem. So as Tim mentioned, kind of where we sit at the funding funnel is kind of post-grant ecosystem, once you guys have started to test and prove product market fit. And I think today, Elaine, Linda, and myself are here to help paint the landscape of investment opportunity as you get past kind of that grants funnel and out into the wild of venture capital, potentially DAOs through the SNS feature set, or through conversations towards, I would say, kind of phase 2 maturity, where Elaine has a lot of experience in both the venture capacity as well as on the market making side at GSR. So I'll pause there and allow Elaine and Linda to introduce themselves as well, and hopefully add on some context in terms of the scope of what we intend to cover together. Elaine?
Yeah, go.
Sorry. Linda first, she's off mute.
Oh, no. Hi, I'm Linda. I co-founded a fund called Scalar Capital, invest in early stage crypto, mostly pre-seed and seed rounds. So I'll be able to share some information on how to go about that today. Prior to that, was an early Coinbase employee, so joined them in 2014. I've been in the crypto space a while and excited to chat about just how to fundraise and answer any questions on how the landscape has changed as well.
Hey, my name is Alan, and I'm responsible at GSR for the business development in Europe. And GSR is, like as Al already mentioned, a market maker, a liquidity provider. So after TG, we work together with projects to help them get to the market, get listed on exchanges, on DEXs, and then make sure the liquidity is there. At the same time, we also act as a corporate venture. So compared to other VCs, we focus on things that is close to our core business, so financial services, where we see potential. And looking forward to talk with all of you about liquidity and investing in this time.
Cool. And just before we continue, feel free to post questions in the chat and I'll make sure we get them answered.
Sounds good. Maybe I can kick it off just in terms of as you think about post grants, there's a couple different kind of opportunity paths that you could walk down. And for a mental model, I'll kind of frame them out in 3 points for you. The first of which I would consider to be a venture studio launch model, where you collaborate with some type of studio resource that helps you to build out go-to-market, marketing, communications, potentially contemplation of legal entity structuring, and maybe preparation of how you engage in your first pre-seed or seed conversations. And there's a venture studio in the IC ecosystem, obviously with Code and State. I think Cedric was actually supposed to speak on this panel as well to this topic, but there are both venture studios that are internet computer ecosystem specific, and there are venture studios that obviously are outside of the ecosystem, but would contemplate projects that have really hit that product market fit maturity line and help you accelerate through that path. So that's kind of, I would say pathway one is around, and not necessarily in order of prioritization. These are, it's your business and your future as far as you define. But venture studio being the first pathway, Code and State being a great embodiment of that inside of the ecosystem. And we can talk more about how venture studios handle both the resource and value creation for companies and founders, and also what they expect in return in terms of value extraction and governance. And then the second pathway is kind of the traditional pre-seed venture path, which I will not discuss in depth because I think Linda can probably give a much better expression of that. And then this third path is the one that Tim hit on, which is really what I would say is kind of the Web3 native path that OpenChat ran. So I think across those 3 different angles, there's a number of opportunities on the landscape. And I'll pause there and let Linda kind of pick up point 2 and chat through a little bit of thinking around the pre-seed and seed type venture investment opportunities that she runs at Scalar.
Yeah, thanks. So pre-seed and seed rounds, like pretty broad category. I would say the first thing to do, which you mentioned really well, is to really consider if this is what the path you actually want to go down. So first, some people will start even with like a friends and family round. So they just want to be able to focus more on building and kind of not take as much time on the fundraising path. There's also others that want to go about and just do a formal round. One thing that you'll have to have is the pitch deck. So I can go over that in more detail later when we talk about how to structure that. The other path is you want to kind of figure out what investors that you want to target in actually putting this round together. So some will decide that they want to have a lead to set the terms and to organize the round and really maybe take like the majority or maybe half of the round in the first place. And then others will say, we want to have more just like angels and smaller funds, and we don't necessarily want to have a lead. There's no right answer, although I would say it is more common to have a lead, someone who like a fund that has more accountability and is able to set the terms and really help guide you through the path. And then in your future rounds, really be like the advocate in one pushing and maybe potentially also doing future rounds depending on the fund. No right answer there. I would say the common term structure right now that leads are presenting is going to, and again, it varies, but it's going to be an equity round. And then there's usually an expectation of some token warrant or token slide letter should you launch a token. In the past, the structures were much more heavy token based or like a SAFT or something. But I would say now it's more the equity plus token warrant model. And this is also common, but again, it varies depending on what you're doing and who you're talking to. But the token valuations are typically double the equity valuation. But there is no like set structure. This is just the most common one that I do see. And so once you talk to your lead and you kind of talk to a bunch of them and see which ones that you want to work with, I think something that's important to consider is which partner in the firm that you're talking to, because people will say like, I really want to have this fund lead. Typically you're going to be working with one person at this fund. So you really want to make sure specifically this is someone that you really enjoy working with and is going to be an advocate for you and is going to have capacity to work with you. Because sometimes what happens is this is a really busy partner or person at the fund and they, end up passing you or having you work with someone else. So I think that's something to be really mindful of. I wouldn't necessarily optimize specifically for valuation all the time. I would really factor in other things like who you're working with and whether or not you think this is a fund that is going to be like a really good long-term partner with you. So that's kind of high level. I have a lot more I can talk about. And then once you want to close out the round, making sure that you bring in like small funds and angels, I think is really helpful because they are really high ROI for their check size, especially angels. I think that if you can bring on really good, helpful angels that specialize in certain areas that can assist you, that's really great because they're typically smaller check sizes, like 10 to 25K. And then the smaller funds being like 100 to 250K or something like that. So yeah, that's a super high level and can go into more detail, just pass it to Elaine to share more.
But if I want to interrupt here quickly, Linda, and ask a question, because I talk to teams pretty much every day that are raising rounds, and many share like, hey, we have a bunch of investors interested, but nobody wants to take the lead so far. Do you have a recommendation, like how do you find or how do you convince one to take the lead?
Yeah, well, first of all, like you can just also proceed without the lead. So I've had plenty of cases where they feel like because no one's taking it and it's just taking really long time and they want to just go back to building, they'll just bring in a lot of really strong funds that they feel like actually have accountability and have a past of working closely. So you can actually have co-leads. So that's one option. One situation there is maybe these funds, they can't write that large of a check, or they're not in a position to, or they don't want to in this situation. And so you can say like, well, these are two funds I really like to work with. Maybe this is something you're open to and co-leading the round. So that's another option. Or just getting a few, small funds together and just saying like, being really clear, like I actually, and talk about a position of strength. Don't say like, oh, we couldn't find anyone, you talk about it and say, this is actually, these are the funds that really resonated with us the most. And we really want to work with you guys and feel like in all our conversations, these were the people we want to chat with. And instead of having lead, we're going to structure it this way and kind of be transparent about it. So you don't have to have a lead. If you really want to convince a lead, I mean, that's going to take time. Like, I think you really need to take time to do relationship building. Sometimes the leads will require many meetings. So I would just not be too set on that if you feel like that's something you really need. Other things you can show is you can be a little slightly further along in your product, and you can use that to kind of show what you've built, because sometimes leads want to see a little bit more traction in something launched and out there. So sometimes I'll see people actually delay slightly so that they can get more things out there for a lead to review. It's really case dependent on what you're looking for.
Okay, thank you very much. I hope many teams listened, because I have the perception that sometimes like, oh, we don't have a lead, we can't proceed. But as you mentioned, it's actually a position of strength that you can take here. There's a question for you, Linda, from Jerome Kelsey, is asking if you're creating a DAO and have structured the DAO to be wrapped around a foundation or LLC, is equity still valid?
So it really depends. So we've been part of DAO rounds where there is actually just not equity and there's just a token structure. But we've also been part of rounds where the intention is to create a DAO, but they end up creating a company first in an equity structure, and then over time that equity like migrates to tokens. So there's no like set structure, I would say. Maybe I'll say what's most common in our portfolio is we have the equity structure that initially started, and then we do get additional tokens once the DAO launches, but then there still is the company behind it that is building on top or building around the ecosystem of the DAO. So we end up getting exposure to both the equity and the token.
Yeah, the point I would add on this, Tim, if I can, is just the contemplation here that's critically important, which people often lack on the founder side, is not the incentives inside of your Web3 software. It's the incentives of your stakeholders on the equity cap table versus the token side. And the rubber hits the road in the moments where you have legally binding accountability to equity stakeholders and you have different stakeholders on the token side. And so the point that Linda's hitting on of kind of the standard deal construct today for folks that are raising equity path financing is a safe plus a token warrant or some type of equity structure plus a token warrant. And the intention behind that financing approach is to maintain incentive alignment across your investors. You can do that as well with an SNS DAO path, but you really have to contemplate the early capitalization of your company. And if you're going to go the SNS DAO route right away, then you really need to think about your prior stakeholders and making sure that there's at least optionality and presentation or disclosure of the fact that you're going to pursue this open financing route. And in that moment, if you give them the option to back your DAO and you're transparent in your disclosure to those stakeholders, you're effectively giving them the basis to make the decision as to whether or not they want to own a piece of the software that you ultimately build or govern it, et cetera. But I think the biggest conflict that arises is when you raise capital on the equity side, potentially without a token warrant, and then go run an SNS DAO, and you've got two different classes of shareholders effectively vying for the same economic value creation, and it generally causes friction and is not a healthy forward dynamic. So I would just advise stakeholder incentive alignment across everyone around your business is as important as the mechanism design inside of your software.
Okay, and then there was from Jerome a little follow-up questions to this DAO question. Are investors looking for equity for an exit if you create a foundation or LLC for DAO?
Yeah, it really depends. I would, and also I guess like a lot of like early stage crypto funds, they're really open to working with the founders on what structure works best. So I think if you have funds that are like in the conversations being like, we're looking for an exit, what's the best structure that, we can get our money back? Like, that's just really not the type of conversation. So you really want to, like as Sal said, like really want to structure in a way that works best for you and everyone's aligned. So I would say if you feel like that structure is the best for you and where you feel it makes the most sense, then yes, investors will, expect that the equity structure is where they're going to be making the returns. So it really depends on how you want to do it.
Okay, and then one more question, and that's not for Linda specifically, that's for all of you. It's from Jordan Smith from Signet Inc. I actually just spoke to them this afternoon. They are building really cool software, and he's writing, we're just about to finish our second 25K grant. How do we show VCs who say they are pre-seed and want to be the first dollar in, but they still want typical traction metrics? We are a strong team and focus on the team when we talk to them, but we're confused when we get questions about traction.
Yeah, I mean, my candid take on this is if they're giving you this feedback, they're probably not really pre-seed investors, because generally speaking, pre-seed investors are investing in you as the founder and the team around the project, the concept, the vision, the idea, and the traction that you've proven towards product market fit, knowing you're going to iterate 50 times and have 4 pivots and different thinking in 6 weeks. So I would this is part of the target market tuning that you should go through in thinking about your investors, to demonstrate if you're targeting an investor or pursuing a conversation that they have prior track record executing truly pre-seed investments, and especially in the IC ecosystem. So if you have other founders who have received pre-seed, founder friends in your circles that have received pre-seed venture financing from certain funds that are investing into the ecosystem, your likelihood and affinity to close them on a pre-seed check is much higher if they've proven, 1, they invest in the IC ecosystem, and 2, they actually invest at pre-seed phase, post-grant program out of this funnel.
Yeah, same comment from me. Actually, like the pre-seed investments we do, the vast majority of them, they haven't even launched yet. And it's a founder that we're just betting on and understanding that what it looks like now and is going to be extremely different. Like one founder through the raise, ended up changing slightly on what they were working on, and we still wanted to invest because it was the founder at the end of the day. So if they're saying that, I'm skeptical that's actually what they're doing. And honestly, like sometimes what does happen is that there's a reason they want to pass on the round, and they're kind of using that as an excuse. Just to be candid, like people just try to say things like kind of vaguely like that kind of allows them to pass on the round. So don't take it personally. This is kind of just what happens in the process, and everyone's going to experience knows for sure. And I would say, in addition is like if you have friends that did raises, like reference checking investors just to get a sense of what it's like in the process and how to work with them. That's super valuable, and you can actually save time if they're like, this is an investor that like kind of dragged their feet and just waste their time or ghosted us. There's also, and this is a little bit more common for like tech and less so crypto, but there's also like VC rating sites that if you actually like those like anonymous advice and like, hey, this person just goes to me, I would caveat that like don't just take it like one person's advice, especially if you don't know them. But if you see there's like consistent ratings of they're like, this person has ghosted me, you can definitely use that as like a signal if you got ghosted, and then it's like it's not just you. So maybe another feedback point.
Yeah, Jordan is already texting. Thank you very much for clarifying this excellent point regarding track record and pre-seed investment. So thank you from Jordan. But I just see there's another question coming in. What I was trying to ask is why equity in Web3 plays when the company is often just a software developer and is contract with the foundation/LLC of a DAO.
Yeah, I mean, this is a play on the current state of the regulatory environment and founders' decision point as to when they launch a token and what is the regulatory framework and jurisdiction they operate under, and whether that's permissible or introduces personal risk. So oftentimes what I see is founders that need to raise outside financing because their product is not mature enough, does not have real users or real utility in the wild yet. And so they're hesitant as a result of some of the Western economy regulatory pressures to issue a token, absent real traction, real users, et cetera, and clear mechanic design and utility and governance of the token. And so they often end up pursuing that equity path financing with the token warrant structure. In the world of the IC, the universe of opportunity is different. And so I think the reality is, post-grant program, there is a direct path to an SNS listing with a foundation that's structured through now some more clear regulatory frameworks. The UAE specifically has been now a major hub. There's also other countries in the Middle East, but we're seeing progress out of specific countries in Asia as well. So I think the opportunity path and aperture for path 3 to SNS DAO without ever taking equity financing is real here at this point in time, in a way that it has been very difficult to do so in the past. And so if you do go that route, I would encourage founders to pursue a framework and a jurisdiction that you very well understand and has a clear approach towards dealing with tokens. And if you can find both of those things, then that path becomes quite viable at an earlier stage than it otherwise may be for other founders and other ecosystems.
Yeah, and just a quick hint from me, like we're working with a bunch of ecosystem providers in the UAE, and also happy to connect you there if you want to set up a company there or legal framework for a DAO. And also we have one project on the Internet Computer that is actually building a DAO and registered as a association in Liechtenstein, which is a very small country between Switzerland and Austria. So there's ways, if you're interested in that path, just come and talk to us. Like we're happy to help. There's another question coming in. Let's take it while we're here. I know this is not really about SNS, but if you go grant to SNS in a favorable framework jurisdiction, do you have to already have an existing community, or is there a straightforward path toward accessing the ICP general community for the SNS sale?
Yeah, I mean, this totally varies based on jurisdiction. So this is what you would do is pursue legal counsel from the UAE to understand their guidance and diligence and expectations of a token sale. And one of those requirements, or some of those requirements, will be specific metrics or maturity points around the project, specific disclosures required around the project, things of that nature. And that's going to vary by specific location. So it'll look different in Hong Kong, it'll look different in Japan, different in Singapore, different in Switzerland. So that's a legal question more so than anything, which I don't think any of us are lawyers, happily so.
Yeah, and I think it's also still quite a gray space. As far as I know, OpenChat didn't even register a company before, or just like a very small limited company somewhere. So still a bit Wild West and people just try something. But again, like if you're planning to do that, like please consult with us and we're happy to provide some solutions that we've seen in the field. And then the second part of the question, or is there a straightforward path toward accessing the ICP general community for the SNS sale? Just from our side, you would just like send a proposal to the NNS, and if that's approved, the token sale will happen. There's not much of not much less than that being straightforward to request the token sale with the NNS, and if that's approved, you can go ahead. Okay, that's it for questions for now. Where did we stop? Where should we continue?
Yeah, I think we probably pivot from the venture discussion and talk about path 3, and assuming you get past this kind of token issuance moment, and now you're in the preparation process for that moment and want to make sure that you construct a healthy market around the asset. Because I think that's an area that is super relevant to the preparation and planning process to pursue that path, and it's somewhere that obviously Elaine has deep expertise in. So maybe we pivot to that point and talk about the role of market makers in bootstrapping projects, and how you think about, Elaine, as well, the venture incentive piece and making sure that you have alignment with, organizations you support.
Yeah, I mean, let's start with the last point. I think on the venture side, as a corporate venture investor and GSR Invest, we mostly focused on token. So I actually like the latest focus. I understand why the equity play is in it. We have a strong belief that most of the monetization will happen through the tokens. So the expertise is there as well. What is our role? Essentially, when we start to work, when we think about crypto, it's a bit different to TradFi, because in crypto, if you're a protocol and you have a token, having liquidity in token is essentially part of having a proper infrastructure. What do I mean by that? A very simple example is if you buy a Tesla and the stock halves, it's annoying, but it has no impact on new products, the Tesla itself. But if you think about most protocol, if the token cannot be accessed, it's not liquid, the price is jumping around, it will actually have a significant impact on your community, how the protocol actually can be used. So what our job is, normally 6 to 9 months before a project has a listing date or TG in mind, they start the discussion with us. And our job will be to guide them. One part that's often coming up is everything legal related. I'm not a lawyer going into that, but the topic was already crossed a bit before. even if people say it's Wild West or not, it's really worse to have a good lawyer and make sure you have a proper structure when you issue the token and also for the corporation, because otherwise you will have problem, especially also on the centralized listing. Then we basically work together with the project, give them some feedback on the tokenomic side. Sometimes there's some last moment adjustment to make sure every stakeholder is aligned and the launch has more success. Then we start working together to reach out to different exchanges. Then there's the moment where the token gets listed, and then our job essentially starts. We will run engines and basically make sure that your community or everybody that wants to use your token can flawlessly buy and sell. So what will the market maker do? He will not generate volume. That's the function of you having product market fit and actually have user in it that wants to have access to the token. But we more basically can make sure that the volatility is stamped, that the price is not jumping around, because we are always willing to buy and sell at any price point. Now, what's really important when we put on the hat as a liquidity provider, we want to see the project succeed, but we are agnostic. So our job is to provide volatility. And if your token price moves, we will be able to monetize our service. We don't have a bias to make the price increase or decrease. I think that's very important. Also looking at crypto Twitter, I think there's a lot of wrong stuff going on in market maker. We only enhance the trading experience. I think that's the most important. And then when you basically are on the secondary market, there are various ways, if you have some inventory, to actually raise further funds. That can be an OTC token sell, that can be using option and other derivatives to basically have some kind of finance structure where you get upfront payment without necessarily doing the token. But that's where me can add a bit more value than the VCs before, I would say, the moment the token is out there and trading on the secondary market.
Alan, the question is coming in. What are thoughts on ideal costs for a startup to keep aside for launching on exchanges and thoughts on DEXs versus centralized exchanges?
Yeah, I mean, I would say for a SEX budget, if you have somewhere 200 to 400K reserved, you're probably going to be fine. It changes a bit. It's also a function, or let's say from soft KPIs. I mean, if you have a big Twitter following, if you basically have a huge community, if you basically can bring something to the exchange, they lack certain user base in certain area, you always have room to negotiate. But I would say 200 to 400K is a good budget to put aside. On the DEX side, I would say there is a strong preference to launch first on a centralized exchange than a DEX. The reason is for that, I know in the past there were projects were preferring the DEXs, but sometimes I think the foresight is a bit on the shorter side. Essentially, if you launch on a SEX, if you look at it statistically, you will have a positive momentum. If you look at DEXs, normally they are there to get token dumped on it. And it's also very easy if you think about it. If you get launched on an exchange, your token is essentially a new product for the user base of the exchange. So the exchange has any incentive to make sure as many eyeballs as possible will see your token price. They will push it, they will put it in front of a much more user base. If you think about a DEX, you normally go there and you found a nice drop-down list with thousands of tokens on it. So the probability of an investor randomly coming across your DEX pool and then buying your token is much lower. It's more existing investors that exit in a more discreet way. So what we are advised normally, start on a SEX, then a few days later, set up a DEX pool. Now, when you think about setting up a DEX pool, depending on the market structure, but the biggest challenge will be to manage to implement loss. So reach out to someone that understands them to manage liquidity on a DEX pool, because if you just set up two crazy pools, you will just over time lose money, which is not in your interest because it's essentially depleting your treasury. Not sure if that answered the questions.
We can only see if he replies in the comments. But I'll let you know. That was great. Transfer from Sean.
Just something to think about it, as we mentioned it before. Depending on your jurisdiction and how your setup is, your token will have a different classification. And depending on which venue you will get listed, it could be certain user bases will be excluded. I mean, we just found out the CFTC issue with Binance, we're giving UX issuer access to it. Always keep in back of the mind, if you set up a DEX pool, you essentially open up your token to any user base in any geography to access. So if you have a token which basically could get listed on an exchange excluding US, you will just make that case much harder if you spawn up as a project the DEX pool. Just keep that in mind. The moment essentially you as a project itself set up a DEX pool, you're basically making your token accessible to the whole world.
Yeah, so the best practice there is generally to have some arm's length relationship, build the pools and manage the impermanent loss, and not be associated with the project itself, especially if you have constraints on the token access to US investors. Just to give like the shortcut growth hack there. It's like still very possible to do that if you choose, but you should make sure that that's not a founder or part of the project team and someone in the community that has the expertise to manage the related risks. And they're going to take on the risk if they do that, right? You should be transparent to them, but there will be people that want to do that.
Thank you. Good advice, Stansbury. We covered quite a lot already, Ala. Anything else, like how to, except of like coming to you and say, hey, can you help us getting listed on a top tier exchange? Like, what are the things a project should have ready by then? You mentioned like have a user base, have some Twitter followers and so on. But what is your experience? What are the centralized exchanges are looking for, or what are their requirements to list a project?
I mean, yeah, we can start with the easy part. I mean, when you launch a new product, you want to grow a community. So we assume that the moment you launch, you have taken care of the community and all the social media stuff. I think what the exchanges we're looking for, at one point, you will have to provide something like a legal opinion or a legal memorandum, giving them some kind of comfort based on your structure and where you domiciled, that everything is compliant. I mean, get a good lawyer, make that. And then if you look at that on a high level, essentially there's the US legal opinion, then there's Asian one, mostly Singapore, then you have European ones. I would say the gold standard is still a US one, just for the simple fact that the US regulator has a tendency to have the most draconian punishment and the most far reach. So get one of that. Something else, we mentioned that before, having some kind of legal structure or entity available, which essentially can contract, being the market maker, being the contracts you do with the exchanges, is also really helpful to have in place. Thought out tokenomics is also very good. Just a very easy rule of thumb, if you're a project and working on that, whatever your allocation is, just make sure you have somewhere between 5 and let's say 15% allocated to liquidity. It sounds like a lot, but if you think you're going to be in the market for 3 to 10 years, how the market making models work, you will have to put up some inventory for them to provide liquidity. And then depending how the market it gets sold out. So if you have somewhere between 5 to 10% allocated, it will make your life much easier. Otherwise, one of the last minute changes, which is always a bit bad for the trust to the investor that already signed. If you change the stuff after agreed on it, just put it up to 5-10%, because otherwise you will try to scrap it together and the budget will not work out.
Okay, thank you. And then a question is like, GSR is one market maker. From what size would you say, hey, you need 2 market makers or 3 market makers? Like, is there like a rule of thumb, or you say like, hey, it's fine just going with one, or should you have a second one?
I mean, I would say it depends a bit on the valuation and also the stage of the project. And then when it's listed, it's much easier if you just look at the average daily volume they have. If a project starts out, you can say, okay, I'm going to have more market maker. The thing is, from a prospect standpoint, you're just going to give up much more of your inventory in an early stage. It's probably much more worse to actually end up with a good market maker and not with the cheap Charlie one, which just going to fuck it up. Sorry, which just going to do a bad job, which is going to be very bad for your future token price. So I normally would say, do your due diligence, get some references, start out with one. Now, how to think about it? If your project reaches around, let's say, 100, 200 million average daily volume. Now imagine we have a bad day, the market drops 10%. So you basically have, what's that, 10 to 20 million sell pressure. So the market maker job will then essentially be to put this balance sheet at risk and buy the inventory back. So if you have that sizes on a daily basis, and let's say excluding wash volume, you probably want to have 2 to 3 market makers just to ensure there's enough balance sheet available to do the job. Because each market maker won't be the exit liquidity. So if you have more trading volume, you have bigger spikes up and down, at that point it's going to be worth.
Okay, cool. Hey, and then also a question that I wrote down before is like, if I have all those tokens, how do I pay my people? Like, how do I transfer tokens to fiat? What is a common model that you guys see projects are doing?
I mean, that's a reason why a lot of projects set up a development company or software company. You get an easy bank account and you basically can sell some token, you get US dollar to your bank, and then you just pay it. I think what's a bit tricky is if you look for a market maker to do third-party payment, just because that opens up a huge Pandora's box with respect to AML and KYC. Another thing now, with Silvergate and Signature gone, I think the banking rails, not sure how strongly that impacting European project, but especially in the US side, it's getting a bit more tricky. But if you're really a project, if the fundraising you did is KYC, is AML compliant, and you're essentially a software company, I think it's less of an issue there. Otherwise, you see also a project, depending how far to the right there on the crypto native spectrum, is they just run their operation in stablecoin and cryptos. Yeah.
So there's a question from Jake, and I'm sure the answer is it depends, but I'm still asking it. He's asking, is there anywhere to get advice of best structure for my Web3 product or like learning resources?
Specific for market making, or?
I think it's more in general, like what legal structure and like more like where he could inform himself.
I mean, I can say in Switzerland, we have Amami. Andreas Glarner is one of their partners. I think that's one of the law companies that has been involved in a lot of projects. I think they have a lot of free resource out there. I think, yeah. But otherwise, for legal resources, it's a bit.
Yeah, I mean, this is a totally individual question because this comes down to your risk appetite and tolerance as a founder. And in doing so, in the different paths we've discussed here, there are different regulatory risk profiles, and your management and acceptance of risk and then management of risk are up to you, right? And so I would engage with legal counsel you can probably look to Big Four consulting firms to contemplate jurisdictions that have favorable environments. You can start top down with a global consulting firm, highlight the top 7 to 10 jurisdictions for consideration, and then pursue legal resources from the top law firms serving crypto founders in each of those jurisdictions and scrape that data, kind of like the example that Elaine mentioned in Switzerland. And then ultimately it comes down to your diligence and engagement with the law firms, right? You should engage with, once you scrape all their data, get their public point of views, pretty much everyone will give you 30 minutes for free. And so if you come inbound, depending on their workload and demand and where they stand, they'll give you 30 minutes, come with structured questions, and do that 5 times. And you're going to end up with 5 different points of view because that's the state of legal advice and regulatory stuff in the space. It's not, and I'm not saying Big Four to go spend the money, go review their resources that are publicly available for free as the starting point to identify jurisdictions that you want to research. And then from there, you can identify the law firms in those jurisdictions that have previously served crypto founders, right? I'm just giving you a funnel to hone how you do your research on this topic to get public information. But the reality is eventually you need to have direct engagement to law firms. Otherwise you won't land in a place where for your risk appetite specifically, you get the right advice.
Yeah.
Don't do it yourself lawyer. I mean, there's as Saul mentioned, at one point in time, you want to have a specific conversation which is specifically focused on your project and your own situation.
Hey, and then there was a question related to all those costs for lawyers getting listed on a DEX and so on. Can you include them in the pitch deck in the ask slide? Like what you ask for X amount of money and you use it for that. Can you, like the question is if you can like add those costs for what you're raising money?
I personally would not include that. I know that sometimes there'll be like a financial slide, but actually more commonly, people will just say, this is how much we're looking to raise. And you can maybe have further discussions if the investor wants to get into it. But I just think that's too much detail to put in a pitch deck, because the pitch deck is really just supposed to draw in the investor to have a conversation with you and to talk about the round. You don't need to go into like the nitty gritty because it's really on you on like the execution stuff. So that's my own personal thought on it.
Thank you. Wait, there's another one, Linda. I'm curious about what Linda was saying regarding pitch decks. We've gone through quite a few iterations, but we often get in our own heads regarding what VCs are looking for in a deck in a first meeting. Should we send it over in advance? What additional information should we provide in a second meeting deck if it's a pre-seed VC? We know there are tons of these 10 slides are all you need resources out there, but it also varies a lot from one resource to another.
Yeah, happy to talk about the pitch deck. So I think there are a lot of different resources out there. I wouldn't say that you need to prescribe to an exact template. In fact, I really think that you should think about how to best present your own company and situation and kind of use those as just like broad models that you can use. So my favorite that I refer people to is the Sequoia Capital pitch deck. That's the classic one. I just want to caveat a few other items. So it specifically doesn't have to be in that order. So an example is if you feel like one of your strengths is actually the team, like let's say you've had a history of shipping and have worked on really incredible projects, like I would be moving that team slide up ahead and really showcase that instead of putting that actually in what Sequoia recommends at the end. So it really depends on like what you feel like are the strengths. And I would say the most important thing that I would recommend is making sure that you're able to explain what you're working on just in a single sentence. So an investor should be able to take what you're saying and be able to immediately understand and relay that to their teammates, to other investors they talk to. You really want to make sure that that's clear. I cannot tell you how many times I've seen a pitch deck that I've looked at and I go through the entire thing and I still don't even understand what they're building. So just one sentence at the start, like really like, what are you building? And make sure that you're not too wordy. Remember that investors are looking at a lot of different decks. And so the last thing you want to do is just kind of put down every single thought that you have in the deck. That's where the conversations are for if you want to get into the more nitty gritty. I've also seen some decide, okay, we feel this is important, but maybe not like the most important thing that we should show the investor right away. Like, let's move it to an appendix. That's another option. But I would just kind of keep the deck really clean and straightforward. One thing I would add as a caveat to the Sequoia Capital one is the business model slide. It's really, you don't have to necessarily include that if you're super early stage, like pre-seed or seed. I probably see about 50-50. So some funds will want to see that. Others understand that you're so early on and you don't necessarily need to know that information. I really just want to say, like, don't feel like you have to like put together that slide if you really feel like the business model isn't 100% clear yet. And it's something you can discuss in the call. One thing I would include, if you have it, is like, you know, mock-ups, videos, links to like a demo, anything that you can concretely show that's what it has been built, and helps the investor really like see the product. I think that's always super helpful. And then I already kind of touched upon the financial slide. Actually, I would say majority of pre-seed in crypto don't have like a financial slide beyond like, this is how much you're raising. Some founders will put, this is the valuation we're targeting. I would say the majority don't, because that's usually a number that you want to kind of talk to investors about, because you don't necessarily want to anchor them to something. Often the leads will set that, but again, it varies. It really depends. If you have close relationships with these funds and you want to say the number that you're targeting, by all means, you can say this is the valuation. Others kind of want to keep that closer to their chest and only share that and get it engaged. So that's how I would adjust the Sequoia Capital slides. Regarding whether or not to send this beforehand, I personally think it's better to be able to send that beforehand, because you want the investor to be able to read through it beforehand and then come prepared to a meeting. I think it's really difficult when you know, you're just going into a meeting and you don't really know anything, and I think you're in a way like wasting a bit of time, because you can't actually get into like more the nitty-gritty and take it from there. Usually, like, if you didn't send the deck beforehand, you're just kind of walking through the deck, and I just don't think that's as effective. But I understand people are concerned about sending the deck out. I would assume, like, you should definitely assume that once you send the deck out, that it's going to be circulated, unfortunately. Assume that this deck is being sent to other investors, or it could even get leaked. So just be careful of what you're putting in there. Hopefully that doesn't happen, but unfortunately that's just kind of the reality if you're sending to a bunch of different people. I think that's really high level. DocSend is a good tool people use to be able to see who's reviewed the deck and kind of have a little bit more control of it if that's something you're worried about. But people can still screenshot the deck, so just know that as well.
Thank you so much, Linda. And also, Linda put a link into the chat with the perfect pitch deck from Sequoia Capital. Jordan says, thank you. I will also add a link to a template that we from DFINITY have. Like, so I asked that looking for a round to fill in that template. It's basically just a one slide where you can like share what you're doing, like what are the differentiators, who is the team, and kind of like what's on the roadmap. And if you have a video, that's more for us internally, that we know which teams are looking for a round, and also what you guys are doing. And then whenever we meet VCs, we kind of like share what you guys are doing, what do you guys do different, and if the VC is interested, then we can do a warm intro that you can actually pitch yourself to the VCs. Linda, there's another question from Jerome. Is it recommended to send a recording via Zoom or private video sharing, or just a dry PowerPoint to be read by the investor?
Yes, sorry, I just also realized the link is I can only send to hosts and panelists, by the way, so I don't know if you're able to send that to right. Perfect. Yeah, is it recommended to send a recording? So I wouldn't necessarily recommend it. I would say that if you feel like this is a really strong product and like an investor is going to come away with it and be like, this is really clear and, you know, that really adds to the presentation, for sure send it. If it's like not that strong, I would kind of just include that as like embedded within the deck, just because you kind of want to reduce the number of things that investors are going to have to click and go through like in separate documents, just because it can just be overwhelming and kind of reduce your chances of getting seen. So again, it just depends. Yeah.
Cool. Thank you very much. Are there any other topics that we want to cover? I see Salvatore left. He mentioned he had to leave earlier. Or are there any questions still in the room? Then please post them in the chat. And Linda and Allah, if you still have topics that you think are relevant, please copy paste is blocked in the chat. What do you want to write, Jordan? Can you just write it?
I can touch upon something else, like in terms of actually closing the conversations. So one thing I think that's really important is that you're going to have some questions from the investor in a lot of cases, and you're going to need to follow up with them. One thing I would just say is like, be really quick about that follow-up and be on top of maybe these are the most common things that we think people are going to be asking for. And so really have that prepared ahead of time so that you can respond to the investor quickly, because you want to be able to capture their attention while you still have it. So if they just got off the call with you and you're able to follow through with the things that they asked, that's going to kind of keep their attention. Whereas if you're sending this like 2 weeks later or something, it's going to be, they're not going to remember you as much. And because remember, they're meeting a ton of different people. So I would just say, be really, really quick on the follow-up. I would say another thing is like, if you end up closing the round, another thing to think about is the actual like investor relations part of it. I think that the really great companies and founders, I think that they really leverage their investors. And so one thing to do is just try to keep them engaged early on, especially in pre-seed, where there's a lot of things that investors can concretely do. So what I would recommend is writing an investor update. It doesn't have to be that long. It could just be like really high level and then talk about the things that you need help with. So typically the cadence I would say and recommend is once a month when you're first starting out. And then as you kind of need less and less help, maybe once a quarter. But I would really make sure to keep investors engaged, because they really have an incentive to help you. And once they know more about what they can do for you, like you can really use them. And then kind of a tip that I would recommend is I think this works quite well, is you actually in the investor update, shout out investors that helped you the last time you sent out an update. And so you can say like, shout out to this investor who made an intro to blah, blah, blah. Or, you can say more generically what they helped you with. Because investors want to show that they're value add, and they get a little competitive. So it works super, super well if you're kind of closing that loop. Because if you're consistently just not on the list, like no one likes to see that. So that I think is really important in terms of what kind of asks you can do. Intros to market makers, intros to media for the fundraising announcement, intros to different hires, getting just product advice and feedback, getting on a call and talking about go-to-market strategy. So really just like be very transparent and vocal about the things that you could use help with. Like you're not bothering your investors. This is their job, is to support you and help you.
Thank you. There were some really, really good tips. I hope you guys are taking notes. Otherwise, this will be recorded and hopefully available on YouTube next week. Thank you so much, Linda. Anything else you guys want to add? Yeah, also Silvia says awesome tips, Linda. Thank you. Any questions in the chat, or Alor, do you want to add anything? You good?
All good from my side. Yeah, thanks.
Linda, you have any more? We just spoke.
I mean, I have all kinds of tips. I don't know. What's most helpful to people. Let me just see if there's anything. I guess like a couple more points is like, when you're trying to figure out who, like if you're making a list of investors you want to reach out to, ideally have like a warm intro. And I would say the best intros come from other founders to an investor, because that's high signal, especially if it's one that the investor already invested in. I think that that's a really ideal relationship. And then also another investor, ideally one that is already committed or is already really interested, because you don't necessarily want to have like somebody who's like, hey, this person's raising, and like they're very neutral about it. You know, you want someone that's actually like, I really, you know, they can vouch for you and things like that. So I think that's really critical, because remember how many inbounds people are getting. I mean, my Twitter and emails are just filled with, you know, various people pitching. So it really rises to the surface when I see it's coming from someone that I really respect, or you know, somebody that I know. Sucks that it is that way, but that's just kind of how people and investors filter through things. Let me see if there's other. Another thing to consider that I just wrote down is so keep in mind the size of the fund that you're talking to in terms of this round. So sometimes you'll see like there's, you know, multi-billion-dollar funds out there. If you're talking to them about a pre-seed round that is like, let's say you're raising $2 million or something, the check sizes for them are just not that impactful for their fund. And so you really want to be mindful of that, because like, are they actually, like, even if they're a big name or something, if they're writing a $1 million check and they're $1 billion fund, you can do the math, how much that would actually affect their fund. So they're not going to necessarily put in the resources. So that's usually saved for like later rounds where, like, you know, series A or B or C, where they're going to be writing more meaningful checks to them, and then they're going to be more incentivized to help you. So just bear in mind like fund sizes, because that does impact how much they work with you and how close they are with you, or just even whether or not they'll do it. So like, you don't necessarily want to waste your time like targeting funds that are just like not writing the right check sizes for you. So I think that's another important thing. And then I kind of touched upon this before, but yeah, do not like to have your investor pressure you in terms of the structure. So like you'll actually get some investors possibly that will pressure you to launch a token. And this has happened many times in the past with founders I've worked with. And note that, you know, you cannot undo something if you're pressured to launch a token and it's not the right time, or it's just not the right structure for what you're building. So just be super careful. And that's, you know, a bit of a red flag if you're just having this investor, like, especially in the process of talking to you, really pressure you to do something. Yeah, those are, I think, just the other ones that I think are important.
Yeah. Thank you so much, Linda. Somebody asked, are you guys open to us contacting you later? You already answered it. It's nice of you, a warm intro. I hope we from the DFINITY Foundation are an organization you trust. So then,
yeah, absolutely. Yeah. You can feel free to share contact info for me.
We usually share contacts, like once we've seen you've built some track record, you've received a grant, and we say this is a valid project, and then we usually do the intros. Then Jerome, that's a question for me. How much appetite is there for applications that started with other blockchain platforms and are now using their front end on the IC and intending on going deeper with the ICP development? Especially if you intend to go deeper in the IC development, I think there is an incentive for us to help you with a grant. But as I mentioned, like, I'm not really working with grants. I would say the best thing for you is like join the developer Discord, and we have twice a week office hours, and that's exactly the people who are doing the grant interviews. So those are the people to ask what they're looking for. And I post in the chat requests for startups list. That's something that's like topics that we from the DFINITY Foundation looking for, where entrepreneurs and developers would build upon. So that's out in the chat there. There's a QR code that links to a form where you can give us feedback on those sessions, and our Twitter and LinkedIn, as well as our website. Feel free to contact us. As I just mentioned, like the developer Discord is a really good way to get in touch for tech help with live sessions. You can talk to us. You can always reach out to me. Like, my Telegram is my name, @TimHerman. Yeah, thank you so much for joining today. Thank you so much, Linda, for being here and adding so much valuable content. And same for you, Alain. Thank you for joining and having really good insights. And I'll say thank you to Sal when I see him. And yeah, let's continue on our paths. And I hope to hear from many of you, and hopefully do some warm intros to the people you've met today and some other VCs. The chat is still, thanks everyone. Okay, seems to that we have really good feedback on what we've done today. So again, thank you, Linda and Ella, and wishing you all a great evening or great day wherever you are and what time it is for you now. So thanks very much.
Thank you.
Thank you. Bye.
Bye-bye.